Hi, beautiful souls. Welcome to Snap News TV. Today we will be talking about Bitcoin. You're likely curious, pondering over what's going down with Bitcoin currently. To put it mildly, it's been resembling a roller coaster journey, the kind that doesn't leave you thrilled. Bitcoin prices have taken a downward turn recently, dropping beneath the $90,000 threshold. This price tumble has created tidal waves of dread and panic through the market, leading to a considerable amount of turmoil and ambivalence. However, this instability is not only due to market nervousness. No, there's a tad more drama to this tale. The Bybit exchange, a notable entity in the cryptocurrency domain, has suffered a hacking incident which has stirred the broth of uncertainty. But hold on, there's even more. Potential legislative amendments are looming, and the omnipresent role of the Federal Reserve cannot be overlooked. These elements are the hidden components in this tumultuous crypto blend, infusing an element of the unknown into an already intricate situation. So the big question that everyone's asking is, should you buy the dip? Well, folks, the advice from analysts right now, don't buy the dip. That's right, the Bitcoin price crash has everyone on edge, and the analysts are saying, hold your horses, don't rush in to buy that dip. So what's causing this? Well, it's a cocktail of factors that's putting a dampener on the crypto market. First up, we've got the Federal Reserve and their stance on interest rates and inflation. They're like the puppet masters pulling the strings behind the scenes. When they decide to hike up the interest rates, it sends tremors through the financial markets, and these tremors are felt in the crypto space too, not to mention inflation, that pesky little monster that eats away at your money's value. The Fed's decisions on these issues have a big say in what happens in Bitcoin land. Then we've got potential regulatory shifts. Oh, regulations. The necessary evil. They're like the parents of the financial world, always looking to impose rules for our own good. But sometimes they can be a bit too overbearing, and right now, there's a lot of uncertainty about what new rules might be coming our way. This uncertainty is causing a lot of instability in the market. And let's not forget the macroeconomic uncertainties, the big picture stuff that's out of our control. Things like global political tensions, economic crises, and even the weather can have an impact on the market. These uncertainties are creating a lot of fear and doubt, making people think twice before they put their money into Bitcoin. But wait, there's more to this story. JP Morgan is chiming in with a pretty serious warning as well. While the world is grappling with the current Bitcoin price crash, JP Morgan's analysts have sounded the alarm on the weakening institutional demand for Bitcoin and Ethereum futures. This trend, they say, is a bearish signal that could lead to a sharp decline in prices. They've even gone so far as to predict a potential collapse in the Bitcoin price to around $70,000. That's a pretty chilling forecast, isn't it? But it's not just about doom and gloom. While some institutions seem to be retreating, others are making bold moves towards Bitcoin adoption. Case in point, Abu Dhabi's sovereign wealth fund recently made a significant purchase of BlackRock's spot Bitcoin ETF. This is a clear indicator of a global race towards Bitcoin adoption. Countries and institutions worldwide are recognizing the potential of this digital asset, despite the current market volatility. And that's the thing about Bitcoin and the broader cryptocurrency market. It's a roller coaster ride. One minute you're at the peak and the next, you're plunging down at breakneck speed. But even amidst the fear and uncertainty, the long-term trend towards global Bitcoin adoption is unmistakable. So what does this all mean? Well, the market is reacting to a myriad of factors. The Federal Reserve's stance on interest rates and inflation, potential regulatory shifts, and even fears of stagflation. It's a complex and rapidly evolving landscape, and these factors are all contributing to the current market sentiment. With all these factors at play, it's no wonder the market is in a state of fear. So what's the takeaway from all this chaos? Well, the crypto market is looking like a roller coaster ride right now. We've got the Bitcoin price crash, and it's not just a little stumble. We're talking about it going down below $90,000, and that's got people in a tizzy. Then there's the warning against buying the dip. Analysts are saying, hold your horses and predicting further drops. Toss in the Federal Reserve's stance on interest rates and inflation, plus the potential for regulatory shifts, and you've got yourself a real crypto cocktail of uncertainty. And let's not forget the global race towards Bitcoin adoption. It's like a high-stakes game of musical chairs, with everyone from Wall Street to Abu Dhabi scrambling to get a piece of the Bitcoin pie. And that's the scoop on the Bitcoin price crash. If you want to stay in the loop with all things crypto, don't forget to subscribe to our channel. We'll keep you updated with the latest news and insights. Stay savvy, folks.